Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 29th of November to Friday the 3rd of December 2021. We've written up the weekly flows to get us underway then. So Euro dollar then plus 12, so over that period, the 29th to the 11th to the 3rd of the 12th, the Euro dollar as an FX pair gained 12 points or pips, Euro yen minus 93, Euro pound plus 75, pound dollar minus 105, pound yen minus 243 and dollar yen minus 94. If you plug that into the formula, you get a positive unopposed driver in the yen at plus 430. No backdoor flows, the opposing negative flows mainly coming out the pound at minus 243, out the euro at minus 6, and the dollar is the negative rock at minus 1, activity plus or minus 430. So over the week then we had a massive strength up in the yen, which was already pretty strong off the back of really the equity transmission, and the pound was taking the brunt of the opposing negative flows. We'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index basically broke a long while ago. It's come back, it's 0.20 from the high. It's a fifth off the model high, 20%. Gold is 0.48 from the high, so it's just above half marks gold. And oil is now softened right off. It's now 0.22 from the floor, 22% above the model floor. Wall Street, S&P Tech, they all had this big equity sell-off. Wall Street is 0.31 from the high, S&P is 0.25 from the high, and the Tech is 0.29 from the high. So Wall Street and the Tech are the worst ones, 31 and 29%. And S&P slightly better at 0.25, 25% off the modelled high. US 10-year in the bund, this is the price, remember. US 10-year is just off the top of the price range, so yields are pretty soft, and the bund has broken resistance, so yields are relatively softer, if you like. So soft yields, but US 10-year it's still a little bit stronger than the European ones. Copper. Again, chopping about, range bound 0.38 from the floor, 38%, and US steel still soft, 0.29 from the floor, so 29%, roughly 30% off the model floor. So we'll stop that there, write up the data cycle, and then do the final analysis. Right, we've written up the data cycle, which is our version of the economic calendar. We split it into tier 1 and tier 2 data. China then, tier 1 positive, tier 2 positive. Dollar tier 1 extremely positive, and tier 2 very positive as well. So Germany positive, negative, Euro positive, neutral, Yen neutral, negative, Pound positive, positive, CAD positive, neutral, AUD neutral, positive, NZD neutral, positive, and the Swiss neutral. So what's the big takeaway? We've got massive data strength in the dollar. That's the big takeaway there, and we've got sort of mixed to neutral in the eurozone here, and we've got fairly solid pound data, and we've got neutrality in the middle. So that's where we are there. If you grab this, if you look at what's been happening then, so if you look at the dollar, the euro, the yen, and the pound in the majors, the CAD, the AUD, and the NZD, and the Swiss. Right, well, we were attempting to build a position long, long AUD, JPY, and NZD, JPY prior to NFP. The NFP basically sent equities shooting lower. So the equity transmission was negative, equities negative, and the yen got us another bounce up. So we were fighting the market because we were getting, and it was pretty strong risk off. So AUD and NZD were dropping. These were, so we were getting both barrels basically, and we took a bit of a hit on that, and we've exited the market prior to the close, ready to see how it opens up on Monday. The likelihood is we'll get a small bounce and then we'll get a further pump down, and it's that second pump down we'll be interested in having another go at long AUD JPY and NZD JPY. The market is extremely overextended in the yen on the upside, so that's where we are there. What's all this about really? Well, they've been making a lot of noises in the Fed about bringing the taper forward. Inflation has been pretty strong, and you can see that US data is roaring away. So the likelihood, yet you don't have a strengthening dollar massively. The dollar's pretty neutral, so that's something to watch out for. So what do we think is going to happen then? As we said, we think there's going to be a bit of a bounce, sort of a relief rally on Monday, but we reckon drop that. We reckon that's going to drop down again. The market really likes to rub things in, and we've had a bit of a minor pasting on the first drop because our timing was bad to say the least, and we're going to hold fire until we get this very strong the world's sort of ending second bounce down, so push down. So that's where we are. Obviously all the transmissions are going to be pretty wild. As I say, initially you're going to get a bounce, and then you're going to get back to full risk off, and that's our belief. And we're going to try and wait for the second drop down, and then ride the storm back up. Now, the other thing is that you normally get this sort of so-called Santa rally towards the back end of trading in December, and obviously this will set it up nicely for a bounce. But anyway, we'll see where we go. Thanks for watching, and see you tomorrow. It won't be Sunday, Monday for the daily briefing. So thank you for watching again, and goodbye.